So yesterday was a first for crypto. $19 billion plus liquidated from the markets within 24 hours. This is bigger than the FTX, Terra Luna crashes. This was bigger than the COVID crash. This was the biggest crash in history by multiples. This wasn't just by a couple of billions, and we throw around the word billions as if it's something small. These are people's lives. And oftentimes people tie their well-being, they tie their entire lives to the idea of money. And in instances where all of that is gone, where only thing that you live for is money, then you really have nothing else to live for. And we've seen on Twitter, just in the last 24 hours, some of the implications of that. But I want to talk about more specifically, if you're watching this video and you don't know what to do, and you don't know what could happen, and what happened potentially to, help yourself further down the road from being in a situation like this. So if you do go back into trading, if you go back into using leverage for any reason, hopefully this video is helpful to you to get a better understanding, to get a better basis of what's happened, what could happen like this in the future, how to prevent it, and really the next direction for crypto. Having been around since 2017 and having been creating content since 2020, I've been around the block, if you will, when it comes to crypto crashes. So we're going to talk about everything you need to know in today's video. If you're new here, my name is Alex. We talk about crypto news, crypto passive income. If you enjoy content like that, consider subscribing. If you enjoyed this video, smash up the like. Without further ado, let's jump into the video. There's really three things that I want to talk about in today's video. What happened, how it happened, and what happens next. Really, what happens next is really all that matters, because you can't change the past. You can only really focus on the future. So what happened? 19 billion plus was liquidated. FTX crashed, for those who remember. When Terra Luna collapsed, I was actually at a crypto conference. So we were watching it kind of like in real time. It was kind of crazy. It was maybe the Terra Luna collapse happened during the conference. It happened like right before or something like that. It was at Consensus in 2022. And then the COVID crash. COVID crash actually happened while I was actually in military tech school. And so at that time, that was actually when, at the COVID crash, was when I first bought half a Bitcoin, because it only made sense to buy at that time, especially knowing, where the market was headed, looking at prior history of the markets. I've been in Bitcoin since 2017, or have been in crypto in general since 2017. So you kind of see how history does oftentimes rhyme. It doesn't repeat, but it oftentimes does rhyme. So, obviously, a massive day, substantially bigger than any other thing. And this poses the question for a lot of people. A lot of people want to know, why was this so much bigger? Because what happened for COVID was, COVID worldwide was a much bigger event. The FTX collapse, that was a pretty big worldwide event. What happened yesterday, outside of something that people have talked about and has been announced multiple times before, has never caused the type of liquidation. So obviously, during times like this, people are always going to place blame. Everyone's going to want to blame everyone except themselves. And I think that's really the biggest takeaway in this, is someone wants to blame someone else because they decided to trade using leverage. It's really all it is the number one reason, and I don't think anyone can disagree on this, the number one reason, and really the only reason, that we saw $19 billion in liquidations was because of leverage traders. People using cross leverage, we'll talk about what exactly that means. That was the only reason. I guarantee you, if no one used cross leverage, and even in isolated positions, we're not getting the nitty gritty of trading, but even if people traded in just isolated positions, that would have never happened. If people only traded spot, we would have not seen $19 billion in liquidations yesterday. Just simply how it is, it's just a simple fact. You can't argue facts. The reason why $19 billion was liquidated was because of cross leverage. So now other people are going to point to, because they don't want to place the blame on themselves, they want to blame somebody else. Trump, this coincided with Trump's announcement. Trump announced a 100% China tariff, sparking $19 billion in crypto liquidations. Trump announcing it didn't spark the 19 billion. I think that was maybe provided the kindling, maybe provided the spark, but it wasn't the fuel. It wasn't really what actually. It might have been like the starting, may have been like the foundation. It was the thing that was used as kind of like the reasoning for this. But it was more than just in the crypto market. This happened in the stock market. The stock market was demolished on Friday. So, when you see this, 1.6 million traders were affected. Bitcoin dropped to 101.5. You saw altcoins, Cosmos, Sui, Chainlink dropping 80%. And the biggest thing that a lot of people are talking about, look at this Sui chart, because this is the hardest thing about all of this, is the post-mortem aspect of this, is how do you even trade a chart like this? Like, how do you even trade this? Like, there's nothing here to trade. This is just the ugliest chart I've ever seen. And so this is about 99% of all altcoins. But here's the thing that, there's always going to be a person that loses more, right? The white whale, a person that I highly value, that I think has a lot of insight and wisdom. This is an individual that actually traded and was up like $50-60 million on his position. Looks like he may have not closed that position according to this, losing almost $60 million in a single day is absolutely insane to think about. Going from 60 million, where you can literally retire multiple lines of your family, multiple generations, to 450,000, right? It's a very, very humbling experience in something like that. Now, mind you, if you lost $10, $100, $1,000, that may have been the only $1,000 you could have lost, right? Just because someone loses $60 million on the timeline doesn't mean that someone who that's more significant than someone who loses $1,000, because that $1,000 could have been the only $1,000 that person had, right? So just be mindful when you see people posting about stuff like that on X. For some people, losing $1,000 is a lot of money. For other people, losing $60 million is a lot of money. It's all relative. But obviously, you have accusations being pointed to likes of Trump and the announcement. You also had, leading up to that, Binance having sent both Bitcoin and ETH from hot wallets to Wintermute. Wintermute is a market maker. They are known historically to be one that causes great catastrophic liquidations. They essentially sell on top of positions, especially when markets drop a little bit, right? That's one thing. But when you see a $20,000 drop in the price of Bitcoin, when you looked at, if you were in front of the computer like I was yesterday watching this unfold, you went from 120,000 to 115,000, and then all of a sudden from 113, 114,000, you went down to 101 within like one candle. That type of liquidation is only possible through the likes of market makers and massive exchanges sending crypto, Bitcoin, Ethereum from hot wallets to further cause liquidations. So obviously this was kind of coincided with a hyperliquid whale who shorted Bitcoin and Ethereum, placing shorts up till exactly 1 minute before Trump threatened tariffs against China. This is, something that a lot of people look at as far as, $190 million in profits in 24 hours. Highly, highly suspicious. You really don't know who it is exactly, but a lot of accusations and a lot of theories as to, someone who happened to time something like that so perfectly. Not to mention, the hyperliquid whale themselves had created brand new accounts right before placing all of these short positions. So it was from all likelihood and from all appearances, insider trading. And that is the other accusation that a lot of people have placed is, well, maybe it was an insider that had insider knowledge, put in all these short positions, obviously causing a lot of fear in the markets. You have on top of that, you have Trump making that announcement right after the short position gets put in. So there's a lot of things. You have Binance sending Bitcoin and Ethereum from hot wallets to Intermute. There's just a lot of things that caused a lot of speculation as to what exactly happened. And you can see these are the rumors, right? Over leveraging, CZ and Binance getting, accusing them of hunting Wintermute. Crypto.com talking about FUD spread that the exchange collapsed alongside Wintermute and is facing bankruptcy. I mean, there's just so many accusations. There are some legitimacy to some of these. USDE actually did depeg and went down to 65 cents before recovering. So, there is some meat on the bone for some of these, but a lot of these are simply just rumors and FUD. But I want to talk about how exactly this happened. And I want to more specifically talk about what does the future look like. So here's the thing is when it comes to trading, now mind you, I've been just trading on Aster, just farming the airdrop. Kind of disappointed with the overall airdrop specifically, but it is what it is. So when you trade, there's two options, right? You can trade cross or you can trade isolated. So isolated essentially is that position alone. So for example, let's just say you are long Bitcoin, Ethereum, and Solana, right? Let's just say you're long those three. If you're trading with 20x leverage and you're using cross leverage trading, that means if one of those hits its liquidation, your other positions can get liquidated to cover that liquidation. So, for example, all cross positions with the same margin asset share one balance. If liquidated, you may lose all margin and related positions. So that means one goes down, they all go down. The problem is when alts go down 80%, no one expects that. No one prepares for that. Your positions that you put in on 20x, that maybe you had a 20x on Bitcoin. Yeah, you didn't expect Bitcoin to go down to $90,000, but you also didn't expect your altcoin SUI to go down to 55 cents, right? That when the altcoins get liquidated, that was when everything else got liquidated. And because of a lot of pairs are tied back to Bitcoin, a lot of altcoin trading pairs also got liquidated. So in the future, maybe try trading isolated, because that means if your SUI short fails on you or your SUI long fails on you and you get liquidated because the price drops, you're still in your Bitcoin position. You're still in your Ethereum position, whatever other position you may be in. That way you're isolating, that's why it's called isolated. You're isolating your risk. Something to be mindful of in the future when you're trading. The downside to isolated trading is your liquidation price point is typically a lot higher because you're only using the assets within that trade specifically, right? So if you have a $500, if you're placing a $500 trade on an Ethereum liquidation, but your account total is 5,000, well, you may only lose $500. But if ETH drops 5%, you lose it instead of a cross position where ETH would have to drop like 20% for you to lose that trade. So very, very basic understanding of the difference between cross and isolated. And the problem for yesterday was because most traders use cross trading when it comes to using margin. That was the biggest takeaway. So what happens next? That is the bigger question, right? So I put this post out earlier because I think a lot of people need to realize where we are, because you have a lot of people on the timeline that I think are being stupid. Just to be quite fairly honest, from altcoin Gordon to this Phil Kwok guy, right? I think they're absolutely stupid with some of the things they're saying. But I'm going to explain exactly why, because everyone should have a why. Regardless of the position you take right now, whether we're going to go up or down, you should have a why and be able to back up that why. If I believe that Bitcoin is over, if I think that we are in the bear market, I need to back that up as to why. Not just something I just pull out of a hat for a random reason because I just don't feel like the market's headed in the right direction. I need to have a good, strong reason as to why. If I think Bitcoin, this is a short-term pullback, and we're going to see all-time highs later on this year, maybe into Q1 of 2026, I need to have a reason for it. And if you don't have a reason for why you're trading, you probably shouldn't be trading in general. So here's what I posted about earlier, and I think this is very, very important for a lot of people also who haven't been in crypto for a long time. So what happened yesterday wasn't like the COVID crash or like the FTX crash. It is either or. So the crash in 2020 was right before, was on the tail end of a bear market, 2019, going into 2020 as an accumulation phase, and then 2021 as a bull market, right? When you saw the crash for Bitcoin, I think it dropped around 3,800 or so with the COVID crash. Mind you, Bitcoin dropped 50% or so at that time. Insane. Bitcoin did not drop 50% this time, and the liquidations were 10 times higher, 8 times higher, whatever number you want to use, right around 8, 9, 10 times higher. So the timing of the crash is very, very important from a mindset perspective. So from a mindset perspective, think about the fact that 2019 was a rough year. Well, I would say 2018 and 2019 were both rough years. 2020 was a year where things started kind of looking a little bit better. And when you look at prior cycles and prior halvening cycles, because that was very much a aspect of trading and mental aspect to most people, people were looking at 2020 and 2021 to be a really, really good year. You're still relatively early coming off of a bear market. They're expecting something exciting in 2020, not to mention the halvening. So there's a lot of bullish factors. You're early, right? The FTX and Terra Luna collapse happened on the tail end of the 2021 bull market. Bitcoin had already gone from 3,800 to 69,000. Almost a 20x, a 15x, somewhere around there. Bitcoin already had its gains, and those gains had been realized. Very, very different market corrections, very, very different outcomes. Bitcoin in that aspect after the FTX collapse, went from 40,000 to a low of 15,008, 15,005, 16,000, something like that. So for a lot of people wanting to compare this current crash that we've seen in the price of Bitcoin to COVID is absolutely stupid. It's not even close to a similar timeline from a market perspective. This isn't a COVID-like crash. It really just isn't. The crash is much more on a similar timeline to the FTX and Terra Luna collapse. It simply is. You look at the data, you look at the analytics, you look at the metrics, you look at the charts. They simply say that this is closer towards the end of the bull market. This isn't a point where, oh, this is just a COVID crash and we're going to go up 15x from here. That's not a fantasy land. So the thing is, Bitcoin has gone from 16,005 to 126,000, about an 8x from its low in 2022, I think, right? 2023. Bitcoin's done extremely well. And to say that, oh, this collapse to 100,000 from 126,000 is like a COVID crash is very, very misleading, in my opinion. And a lot of people are forgetting this. A lot of people, including Altcoin Gordon, talking about the fact that, never seen anything like this. This is a once in a lifetime opportunity. And saying Bitcoin's going to go to new all-time highs. You got people here, flash crash. Saying so bullish. So here's my thought. And this is where I stand in my reasoning behind it. So I said the only saving grace in all of this is October. This happened early into October. We're not even halfway through October yet. This happened early into October. There's still a lot of perspective as far as a new all-time high. I think there was still, if this had happened in late November, a lot of people would have packed up and left home and gone on with their lives. This is, I think, similar to a dump that we saw in September of 2021. Actually, at that time, Bitcoin corrected in a course of about 16 days, about 24%. Now, mind you, this was a 20% correction within what we saw last night within one single day. It wasn't 16 days, but Bitcoin corrected by about 24% in a period of 16 days in the beginning of September of the last bull cycle in 2021, only to go to 69,000 later on that year. So it was relatively early, mind you, that was September. We're at a time in October, early enough to October, where I think this correction, we could see a new all-time high. If this had happened later, if this had happened in November, we would not be seeing a new all-time high. We would be seeing the markets over, because here's the thing. Everyone who is bullish, everyone who is long on the market has no more money to long the market. That is the problem. Everyone that has money right now were people who already believed the market was over, who thought the top was in, who shorted at the top. They're the only people who currently have money. And you think they're going to go long right now after all of this has happened? So, like I said, I don't think 200K is on the books for this year. I do think we can get to 130 to 150,000. In fact, I said this in multiple prior videos on my other channel. On the daily, we're still on an upward trend line. I think there's still hope. So I want to show you exactly what I mean by this. And why there is hope to the post behind Phil Kwok and behind Gordon. Why there is hope. But I don't think this is a time. This isn't the same as a COVID crash. This isn't March 2020. And to try to compare it to March 2020 is very, very misleading. So here we are. This is a terrible chart to look at. But here we are. So we're at a time, this is on an hourly. So we're at a time, let me just move over to the daily. Because I just want to show you this. I posted it on X, but I want to show you this more specifically. This was the crash that I'm talking about in 2020. Now, mind you, the reason I say this is we recently had Bitcoin go to 126,000, right? So we had this pump in 2021 where we saw Bitcoin go to 65,000. We had a bit of a correction. We went bullish, and on the bullish trend line, we dropped right here. Now, if you look at this correction right here, we're going to just go from the top to the bottom. This is September to the bottom. We corrected 25%. Post that, we go to make a new all-time high at $69,000 for Bitcoin. Now, why I think we're very much in a similar perspective is if we go all the way over here, we're still in a very, very bullish trend line. So like, think about this, right? We're seeing something very, very similar happen, right? So we see a very bullish trend line. We see a correction down below it, and we see a pump, right? So this is where we are. This is very, very easy to see. This is this right here. Then we have this correction. We have this correction. We see a pump. We see a drop. We see a new all-time high. We see a drop. We see a pump. We see a correction. We see a new all-time high. And then I think it's over. I think this is very, very similar to what we're seeing in 2021. It's not exact. And that's the problem. It's not exact. So a couple of days off, here or there, I think it's very realistic. I think this is in a very, very, if you're still bullish on the market, this is the thesis that you go with, right? This has to be the thesis that you go with. That I don't think there's any thesis to go to a $200,000 Bitcoin. I don't think that exists in this market. But I think there's a thesis to say that Bitcoin goes to a new all-time high because of how early this happened and how much bullishness is still left, and the fact that we're still on the daily in an upward trajectory, right? So the only way I could see this being invalidated is we have daily charts, or not daily charts, daily candles that close consistently below this 200-day exponential moving average. This is the only way I could see this being invalidated, and therefore we are at that point headed potentially towards a bear market. I think that is the only potential for this to be truly invalidated moving forward. But for the time being, for the time being, mind you, this is still relatively early. We're still, 36 hours post. It's still relatively early. So Monday, markets are going to be open again. Monday, you're also going to have a lot of things come out from the stock market. Stock market also took a very, very big hit. You're going to see futures trading on the stock market open up Sunday night. It's going to be interesting to see what the future market looks like. I don't think there's going to be a green futures market. Remember, Indigenous Peoples Day is on Monday, federal holiday. Things are going to be kind of calm. I think Tuesday is probably going to be the bigger day. I think Tuesday is maybe once you see something from Trump. There was a recent post already talking about the fact that Trump may now actually have conversations with the likes of China. Maybe we see something there. Outside of that, if we do correct, I don't see anything from where we are looking at things right now. There's really not a whole lot that's bullish out there. We could see a drop with support. There's really only two levels. We're gonna either come right down here, right around the $90,000 range, right around here, or we're coming all the way down to 75K. I think realistically, I think in a bear market, once we do correct, this is going to be I don't think we drop below 70,000 in the bear market. I think, let me just rephrase this. I think between 50 and 70,000, I think is going to be the worst case scenario for the bear market. That's a very, very wide range, but these are all just different levels of support and levels of resistance that have historically been both levels of support and levels of resistance. So I do expect, if we do correct, let's just say how this plays out. This is a very, very long played out period, but I think we do see, eventually some of these marks and then new all-time highs. I think depending on how you look at things, if you're thinking the bear market has started, maybe just stablecoin, maybe just go stables, and look at, because maybe you're not sure if this is the top, maybe you're not, and that's fine. Do you really want to buy now for a 5% gain? Like, really, do you want to buy now for a 5% gain? Or do you want to bid your time and wait for a correction down to 70,000 or maybe downward as low as 50,000 in the bear market? For anyone telling you this is a super cycle is being delusional. So be mindful. I don't see in the future, I know this video is getting a little long-winded. I don't see us going down here. I just don't see that happening in this market. I don't see that happening in crypto moving forward. I think 50,000 is just a simple worst case scenario, but even then, 30,000 would be doomsday scenario. But I don't think we see Bitcoin lower than 50,000. You have to also consider the fact that most of your alts are going to be absolutely demolished. What you saw yesterday is going to be your alts before you know it, once the bear market does actually hit. And just be realistic with the fact that Bitcoin's gone from 16,000 to 130,000 freaking dollars. That's insane. That's insane. Insane. So, something to be mindful of. Me personally, I think, like I said in my post, I think the only saving grace to all this is the fact that this happened early. I think we still see a new all-time high. But I'm not 50x leverage. I'm not 20x leverage. I may not even feel comfortable with 5x leverage at this point. But just be careful out there. Be safe out there. Be smart out there. If you want to be winning regardless of things going up or down, then maybe get involved with Hyperliquid's HLP, because that was the real winner out of all this. They are the real winners. So, in fact, if you didn't know, you can contribute and deposit USDC into the Hyperliquidity provider vault. The profits in this vault went from consistently, it's done very, very well as far as trading, from about 80 million to 100. Let's see, what is this? You see in the last 7 days. This is a good representation from profits of 744,000 to 41 million. So about $40 million in profits within 24 hours. Very, very impressive overall. This comes in fees, liquidations, etc. And so if you had USDC, past month return was 177% APR. Really, really good. And you were stable. Something maybe to consider if you're looking at being able to sleep at night, not having to worry about being liquidated on the upside or the downside, is just find yourself in the middle. I'd love to hear your thoughts, genuinely, on everything that's happened. Where do you see things happening moving forward? Let me know your thoughts down below. If you enjoyed this video, smash the like. Enjoy content like this, consider subscribing. Until next time, guys, stay invested.